What really happened to SpaceX stock? You know that feeling when you watch a stock ticker, and it feels like you're watching a rocket launch. The number just keeps climbing, faster than seems possible, and for a second, you think this is it. This is the future happening right in front of me. That's exactly what the world watched happen with SpaceX stock this June. And then, just as fast, everyone watched it happen in reverse. Most people assume that once you're worth $1 trillion, you're set for life. Untouchable. Some permanent, unshakable tier of wealth that regular market chaos can't touch. But here's the thing. Nobody tells you. Elon Musk's net worth fell to approximately $957 billion after both SpaceX and Tesla shares declined. And that happened less than 2 weeks after he became the richest person in human history to ever hold that title. 11 days. That's how long it took to go from history-making trillionaire to merely a billionaire again. My name is Jack, and I spend way too much time thinking about markets, valuations, and why the wealthiest people on Earth can lose more money in a week than most of us will earn in 10 lifetimes. If you want to actually understand what happened here, instead of just seeing the headline, hit subscribe, because this one gets wild. So let me ask you something. When you picture a $2 trillion company, what comes to mind? Something rock solid, right? Something so big, it barely moves. That is not what happened here at all. Let's rewind. SpaceX priced its IPO at $135 per share and began trading at $150 on June 12th. At the IPO price, the listing valued SpaceX at more than $1.77 trillion, and Musk owned about 42% of the company, which combined with his Tesla holdings, put his net worth at more than $1 trillion. Just like that, the man who already ran the world's largest EV maker also owned the world's most valuable rocket company, and the math made him the first trillionaire in history. But the stock didn't stop there. SpaceX shares rose as high as $225.64 on June 16th, and at that peak, the company was worth so much, it was within striking distance of Amazon's valuation. Think about that. A company that launches rockets and sells satellite internet briefly rivaled Amazon, one of the most established businesses on the planet. Musk's fortune rode that wave up to about $1.32 trillion. Here's where it gets interesting, and this is the part most headlines skipped past. This wasn't a slow, controlled climb. It was violent in both directions, and there's a reason for that. As one portfolio manager put it, the stock has a premium valuation and a very low float, so everything gets magnified in both directions. Translate that out of finance speak. Very few shares were actually available to trade, so relatively small waves of buying or selling could send the price swinging wildly, like a small boat in open water instead of a cruise ship. That's the mechanical reason a $2 trillion company could move like a meme stock. And move it did. SpaceX shares fell more than 30% from their June peak during the tech sell-off, and on June 22nd, the stock dropped 16% in a single day, wiping about $240 billion from Musk's fortune. One day. $240 billion. For context, that's more than the entire market value of most Fortune 500 companies, gone in a single trading session, from one person's net worth alone. So what actually caused this? It wasn't some scandal or rocket explosion. It was something much less dramatic and much more revealing. Money and math. SpaceX's own filings showed a $4.9 billion loss in 2025, with its AI division alone spending $12.7 billion in capital expenditure chasing data centers and AI-driven infrastructure. Investors had been betting that Musk could turn that eye-watering spending into a real AI-powered business, not just a rocket company. But when the broader market started getting nervous, that bet suddenly looked a lot riskier. And it wasn't just SpaceX getting nervous. Investor concerns over potential interest rate hikes and fears of an emerging AI bubble were weighing on high-growth tech stocks across the board. This is the part that actually matters for you and me, even if we don't own a single share of SpaceX. When a company priced for a perfect AI future suddenly looks fragile, investors don't just sell that one stock. They start questioning every company writing the same story. Chipmakers like Micron dropped 9%, AMD fell 5.7%, and Intel and Nvidia both slid, with 6 of the 7 Magnificent 7 tech giants under pressure that same week. One overpriced rocket company sneezed. Here's a metaphor
and
half
that
of Silicon Valley caught it perfectly. Better than almost any stock story I've covered. Think about an actual rocket launch. The first few seconds are the most violent part of the entire flight. Enormous energy, enormous risk, and if anything goes even slightly wrong, it shows immediately. SpaceX's stock behaved exactly like that. All that energy going up, then turbulence almost immediately after leaving the pad. That's not a flaw unique to this company. It's what happens to almost every high-profile IPO once actual trading begins and the hype meets daily scrutiny. Now here's the twist that most people miss entirely, and it's honestly the most important part of this whole story. Musk losing $350 billion in paper wealth sounds catastrophic. But for retail investors who actually got IPO allocations at the original $135 price through platforms like Robinhood, Fidelity, or SoFi, even after the pullback, they were still sitting on gains of around 37%. Same stock, same crash, completely different outcome, depending entirely on when you bought in and how you're counting your wins. That's the real lesson buried under all the trillionaire headlines. Musk's net worth isn't cash sitting in a bank account. It's nearly 80% tied up in SpaceX stock alone, according to Bloomberg's calculations. When your fortune lives entirely on a screen, in shares you can't easily sell, a 16% down day isn't a rounding error. It's real, immediate, headline-generating wealth destruction, even though not a single dollar changed hands. And here's where most people mess up the takeaway completely. They see Musk lost trillionaire status and think the story is over, that the crash proved the whole thing was a bubble. But market veterans see it differently. As one analyst noted, sharp sell-offs followed by a bounce are usually a setup to move higher, not a sign the story is finished. There's also a looming factor almost nobody talks about. A 20% insider share unlock is set for after SpaceX's earnings announcement in August, meaning even more shares could hit the market and create fresh volatility, regardless of how the underlying business actually performs. So don't mistake a violent chart for a verdict. This wasn't proof that AI infrastructure spending is doomed, and it wasn't proof that SpaceX is a fraud. It was proof of something much simpler and much more useful for you as an investor. Thin trading floats and sky-high valuations create extreme volatility in both directions, and headlines about billions gained or lost often say more about market mechanics than about whether a business is actually healthy. If SpaceX shares recover in the coming weeks or months, Musk's net worth will bounce right back over the trillion mark, without any real change to the underlying business at all. The rocket doesn't care about the headlines. It just keeps flying, turbulence and all. And understanding that difference between a stock's daily drama and a company's actual trajectory is exactly the kind of thinking that separates panicked selling from patient investing.